EMA means exponential moving average. We have simple moving average, we have exponential moving average, and these are the parameters that you will use when you are inserting your moving averages. So we have EMA 10, it will be in red color, EMA 50, it will be in blue color, EMA 200 will be in black color. Now, what are the conditions for entry? When the red line crosses the blue line from down up, you place a buy. When the red line crosses the blue line from up down, you place a sell. When the red and the blue line cross the black line from down up, you place a buy, usually a very strong buy. When the red and the blue lines cross the black line from up down, you sell, usually a strong sell. Now you can use this strategy on all time frames, 1 minute, 5 minutes, 15 minutes, 1 hour, 30 minutes, 2 hours, 4 hours, daily, on any time frame. But then the condition is that you must take note that this strategy works better when market is trending. It works better when the market trend, or when the market is trending. It works like magic when the market is trending. So let's quickly dive to the chart and let's see how it works. So let me begin with gold. Let me clear this chart and let's install it together. So what I do is I will be coming to insert indicator, trend, then moving average. On moving average, I'll put the first one 10. I'll use exponential, apply to close, then the color is the red color, then I click OK. You can see the red line already inserted on my screen. Then I go back again, insert indicator, trend, moving average. This time around I'll be using 50. The color is blue. Okay, you can see the blue on my screen. Then I'm going to be inserting a third one, which is the moving average 200, indicator, trend, moving average, and I do 200 exponential, may apply to close. This time around the color is black. The color is black. Then you can see the three of them on my screen. So let's go back to the conditions that we said earlier. Conditions for entry: when the red line crosses the blue line from down up, buy. When the red line crosses the blue line from up down, sell. When the red and the blue lines cross the black line from down up, buy. That is a strong buy. In most cases, a strong buy. Then when the red and the blue line cross the black line from up down, usually a strong sell. So let's get back to the chart. This is gold. I told you gold trends a lot. And then gold, let's see gold from okay, let's take it back. Let's see where we can enter. There are a lot of signal here. Okay, so let's look at it from here. Now the red and the blue line have crossed the black line from down up. I will buy. So the moment the red has first of all crossed and the blue has crossed, I'll be placing a buy. Now here's another condition. Now again, the red has crossed the black line. The red has brought across the blue line from down up. Again, from here I'll be taking a sell. The red and the blue line have crossed the black line from up down, I'll be taking a sell. The red, that's the condition, the last condition 4. So the red here now, the red is a little bit up where it has crossed the blue line from up down, I will sell. Then it has crossed from down up, I will buy. It has crossed from up down, I will sell. It has crossed from up down, I will sell. From down up, from up down, from down up, I'll be buying. When the red line crosses the blue line from down up, buy. And it is still buying, it is still buying, it is still buying, it is still buying. It has crossed again, I will buy. But let me give you a very powerful condition that will reduce your loss when you're applying this strategy. Now, please note that when the red and the blue line crossing should be in accordance to the side of the 200 level moving average. 200 level 200 moving average, exponential moving average, which one is 200 level. Now watch this. Okay, let's take it one by one. Let's go from here. Okay, the red and the blue line, they have crossed the black line from down up, I will buy. Now they have crossed from up down here, I will not sell. The red has crossed the blue line from up down, I will not sell because the candles, this cross of red over blue, if it's supposed to be sell, it should be below the 200 moving average. But let's go further, you get it clearer. Now it has crossed from the red line, has crossed the blue line from down up, I will buy. I'll show you how to do your stop loss later. Now this is the example of what I'm saying here. The red has crossed the blue line from up down. In this scenario now, I will not sell because I will only be buying when the crossing is above 200 exponential moving average. I will not sell this market because the candles are above. When they are crossing above the candle, for me to buy, I will buy. For me to sell, it has to be crossing below the 200 moving average. So I will not sell this market now, but then when both of them cross somewhere around here, I will take a sell. Now this sell, I will take this sell, I will not take this buy. It is crossing from down up, but it's still crossing below 200 moving average. But both of them have crossed in this way, and I told you when the red line and the blue line cross the black line from down up, is always a very strong buy. This is a strong buy. And then it is crossing from up down. I will not sell because the candles are still above the 200 EMA. They are still above. It is when they are crossing from down up above this, I've expected to go above. But now both of them have crossed here now. The red has crossed the black line, the blue has crossed the black line. I will take a sell from here. I'll take a sell. And then look at this one now. I'll be taking this sell now because it is below the 200 moving average. I will not take this buy, but I will take this sell. I will not take this buy because see, you can see now the red has crossed the blue line from down up. I'm supposed to buy, but because it is still below 200 moving average, I will not take this buy. But now it has crossed back from up down, sell. I will be taking this sell. I will not take this buy. Because it is still below 200 moving average. I will not take this buy. So, but when both of them cross, okay, or sometimes when the candle cross the 200 level moving average, I will buy. When the candle cross that moving average, because then sometimes you can wait for the lines to also cross. So now it is crossing from up down here, I will not take this sell. But when both of them have crossed the 200 moving average from here, I'll be taking a sell. I will not take this buy because it is still crossing below the 200 moving average, but I will take this sell because it's still below 200 level. So all my sell has to be below 200 moving average, and all my buy will be above 200 moving average. The 200 moving average is the black line. So I'll be taking this sell. I will not take this buy. But when both of them cross, I told you when the red line and the blue line cross the black line, the 200 EMA is a strong buy. It's a strong. So I'll be taking this buy. I will not take this sell because it's still above. I'm expecting to cross up so that I can buy. I'm expecting to cross. I will not take this sell. Now I'll be taking this buy. It's up. It has crossed from down up. I'll be taking this buy. I'll be taking that buy. I will not take this sell. I will not take this sell. But when both of the lines have crossed the 200 moving average, I'll be taking a sell. See the strong sell, very powerful sell. Now both of them have crossed the moving average 200. The red and the blue have crossed the the 200 EMA. I'll be taking a buy. I'll be taking a buy here and enjoying the ride. I will not take this sell here. I will wait until either I wait until this candle close below 200 moving average and enter a sell, or I wait for the two line to cross the EMA moving 200 EMA, and then I'll be placing a sell. I'm placing a sell. This buy now, I will not take it because the candle is still below because it's still crossing below the 200 moving average. Here now, I'll be taking my sell as I see the candle crossing, red line. The red line is crossing the blue line from up down sell, and so I'll be selling this market here. I'll make some profit. I will not take this buy because it is happening below the 200 moving average. But I will take this sell. It crosses by. I will take this sell from somewhere around here, and then I'm selling profit. I will not take this buy because it's happening below the 200 moving average. I will not take this. I will not take this buy. But I will take this sell. I will take this sell. I'll make a little profit, or at worst at break even. And then this, I will not take this buy until these two lines have crossed, or maybe when this candle cross, until the red and the blue moving average have crossed the EMA 200. I'll be taking a buy and see the buy. See the buy is still good. See the buy is still good. See the buy is still good. See the buy. Sometimes one of the ways you can set your stop loss is by adjusting, moving, trailing your stop loss to the last swing, to the previous swing. Or so if I enter a buy here, I put my stop loss here. As the market is going, I put my stop loss, I move 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 my stop loss to this place, I move my stop loss to this place. Or if you leave it, if you are looking for this, you move your stop loss here, you move it here, you move it there, you move it there, you move it there, and see how massive the movement is. So now look at it, has scrolled from up down, sell. I will not sell. It has scrolled down back again from down up. I'll be placing a buy here, and I still have some profit. It has scrolled from up down here. I will not sell, but when it crosses back up, I will buy. Now it has crossed back from down up. The red line has crossed the blue line from down up. I will buy. See, this principle does not mean you will not lose money at all. You will lose money, but you will make much more profit than you lose if you follow if you follow it appropriately. So that is good. And it is very good when you use this strategy on trending instruments. And I told you the other day, I was explaining to you in class that there are certain instruments that stay trending more than the other. Good is one of them. Then I told you we have the Nasdaq, then we have Dow Jones, we have USA 30, then USA 100. That's Nasdaq. I see they trend a lot. And then you have GBP sometimes can be trending, but it works very well on all currency pairs, but works better in some than the other. It works much better when the market is trending or more on an instrument that usually trends. Now let's look at synthetic indices. This is volatility 100. So this pair also stay trend. Sorry, let me do it on volatility 75. Let's do it on volatility 75. We said when the red line crossed the blue line from down up, you buy. When the red line cross the blue line from up down, you sell. When the red and the blue line cross the black line from down up, you buy. It is usually a strong buy. When the red and the blue line cross the black line from up down, usually a sell. So let's begin from here. The red and the blue line here, they are crossing the black line from up down. So this is variety 75, 1 hour time frame. You can choose any time frame. In fact, 15 minutes is very nice sometimes. 15 minutes is very, very nice sometimes. So I'm going to be selling here. The both lines have crossed the black line from up down, sell. Now it's asking me to buy here. The red line has crossed the blue line from down up, buy, but I will not buy because it's crossing below the EMA 200. So, but when both of them have crossed this black line from around here, I'll be placing in my buy. Now here I will not sell because I'm still above the 200 EMA moving average. I will not sell. I will wait. I will wait for both lines to cross the EMA 200 from up down. But now, unfortunately, it's not crossed. But now here, the black line has crossed the blue line from down up and is above the EMA 200. I'm going to be taking a buy here. Is a buy, move my stop loss, move my stop loss, move my stop loss, move my stop loss, move my stop loss. I'm a massive profit. It's crossing down here. I will not say it has crossed again from down up. I'm going to be buying. I'm buying. And so now it has crossed down from up down. I will not sell. It has crossed again from down up. From down up, I'll be placing a buy also here. I'm buying. It has crossed from up down here. I will not sell. But when both lines have crossed the black line, again, I'm going to be placing a sell from here. Now I'm selling. Now it has crossed from down up. I will not buy because the candles are still below. It is crossing below the EMA movement. Below means to sell, above means to buy. Below means to sell, above means to buy. I hope you are hearing me very well, all of you in this class. Now see, now look at it now. Both lines have crossed the black EMA 200. Both lines, EMA 10, EMA 50 have crossed the black line from down up. At this junction now, I'm going to be placing a buy. We're placing a buy here now. I will not sell because it is still above the 200 moving average. Okay, and I'll place a little buy here. I may not make profit in this if I enter a buy here, but I always want to be consistent with it so that I will not miss it when it presents an opportunity to buy again. So here now, you see here now, it is asking me to buy. The both lines have crossed the black line from down up. Is there buy? And I told you when both lines cross, it's always very massive. I'm going to be buying here. I'm not going to sell it still above. Here, I'll buy a little. Here, I'll buy a little. And you see now, it has crossed again from down up. I'll place a buy here and then I'm just riding the winds and I'm still making better money. And so here again, it is from up down. Both candles have crossed here. Both of them have crossed in this place from down up. Sorry, from up down, it is asking me to sell. So I'm going to be selling here. The moment this thing crosses, or maybe when this candle crosses, or I wait till this blue line cross, I'm going to be placing a sell around there. I will not take this buy. Because it is still below the 200 moving average. So when the red line crosses the blue line from up down, I'll be placing a sell. I will not buy. I will be selling here. Look at it, it's still selling. I will not buy here because it's still below the 200 moving average, but I'll be placing a sell here that's crossed from up down. I'll be selling, I'm still selling, it's still selling. It's selling till it reaches this place. So there are ways to put your stop loss actually. There are ways to put your stop loss. Stop loss can be placed at the swing of the price as it's swinging. You can say, okay, I want to do this. You can say I want to, as it crosses here, you put the stop loss here or put it here or put it there or put it there at the swing. You can also say, okay, when the red line crosses the blue line from up down, I'm not going to do anything until candle crosses the blue line back. Here now I'm selling, but my blue line will be my stop loss. When the candle closes above that blue line, here now, maybe I will sell. If it crosses back, I'll continue to sell. Maybe here now, I will close the trade. If it crosses back, I'll continue to sell. If I enter a sell here, the moment the candle closes above the blue line, I'm going to close it. I'm not going to buy here, then I'll be buying here. I'm not going to buy here, but I will buy here because it's below the 200 moving average. Sorry, I'll be selling here because it's below the 200 moving average. So I'm still selling, I'm still selling, I'm still selling. I will not buy here. It is still below the 200 moving average. I will not buy. But then I will sell here. It's below. It's asking me to sell. Below means to sell. So I'll be selling here and I'm still in profit. I will not buy. I will sell in this place. I will not buy. It's still is below, but it's asking me to buy. But now I'll be buying here. The both lines have crossed the black line from down up. I'll be buying here. I will buy here. I will also be buying here. I'll be buying there. Then both lines have crossed the black line from up down. I'll be selling. I'll be selling here. I'll be selling here. I'll be selling, and I'm so to say until candle touches this blue line, I will not come out of this trade. So as I enter my sell around here or around here, I'll hold it until this happens. Then I'll sell a little here. I will not buy here until maybe when the candle closes above the 200 moving average, take a buy, and then my stop loss will be, you can be using the swing. This is the swing, this is the swing, this is the swing. Just depend on how you study the strategy. Okay, I used to use it many years ago when I started trading. My first $400 was from this strategy many years back. Okay, this is not how I trade at the moment, but this can help somebody who who has not completed the master class syllabus but still want to trade and make money. Okay, so I will not, I will sell here when the both line cross. I will sell, at least I'll be in break even. And here now I will buy when the two lines have crossed, the both have both crossed the 200 level, the 200 EMA. I'll be taking, taking a buy here, and then I will not sell, but I will buy here. Okay, I will buy a little here. I will not sell here. I'll be buying here. I will be buying here. I will not sell here until both lines cross the 200 moving average, and I will start selling. I will start selling. I will start selling, and then you see like that. And then here again. Okay, both lines is crossing from up down again. I'll be selling. Both lines are crossing from down up. Both of them have crossed the 200 moving average. I'm going to be placing a buy. I will not sell until both have crossed the 200 moving average. I'll be selling here. And then both of them have crossed again. I'll be placing a buy. I will not sell, but I will buy. I will not sell, but I will sell when both of them cross the black moving average. I'm placing a sell now here, and I will not buy until this candle closes above, or until both lines are closed above, and then here now, when the candles are closed below the 200 moving average, or I wait till both lines cross the 200 moving average, I'm going to be placing a sell. I'll be placing a sell. I'll be placing a sell. I'll be placing a sell. And here again, both lines have crossed the 200 moving average. I'm going to be placing a buy. I'm placing a buy, and then again, both lines have crossed the 200 moving average. I'll be placing a sell. I'm not going to be buying here until the candle closes above 200 moving average, or wait till both lines, close, cross the 200 moving average. Then I'm going to be placing a buy. I'm not going to be selling. No, I'm not going to be selling until the candle closes below. I'm not going to be selling until here now. I'm going to be selling a little. At least I'll be in break even. So what happens is that the moment you enter the trade, when it goes a little in your direction, you quickly come to break even and allow the system to run, allow the price to run. Now here now, both lines have crossed the moving average 200 from down up. I'm going to place in a buy. Now I will not buy until here now, until this candle closes below this 200 moving average. I'm going to place in a sell here. When I place a sell here, I let it run, and I come to break even here. I can be shifting my trailing my stop loss, put it here, then put it there, then put it there, and then it will stop me out here, or I enter from here and I say until candle closes in reverse of, above the blue line. I'm not going to come out of the trade. So when this candle closes above this 200 moving average, I come out of the market. So I'm not going to be buying here, but I'm going to be selling here. I will not buy here, but I will sell here. I will buy when both lines cross the 200 moving average from down up. I'm going to be buying here. Both lines are crossed. This one cross first, and I wait for the second one to cross. Okay, I'm going to be buying there. I'm going to be buying there. And so, as we continue, look at it now. I'm going to be buying and I buy. I will not sell. I will buy a little. Now, I'm not going to sell when this one crosses from up down until I see the candle closes below 200 moving average, or I wait till both lines cross the 200 moving average. I'm going to be placing a sell. I'm selling. I'm shifting my stop loss, 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 and and then, or I enter trade. I enter the sell from here until candle closes above in reverse of the 200 moving average. I'm not going to come out of the trade. and then it closes again, then it crosses back again. I'm going to be entering another sell here and move my top loss, move my stop loss, move my stop loss, move my stop loss. Then it closes here. I'm out of the market. I enter again. That's return again. I enter again, enter a sell here, and then I'm following it, 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 I'm following it until it closes above the 200 moving average. I'm out of the market here. Imagine I've entered from here, I come out from here, I enter from here, I come out from here, and like that, like that, like that, like that, like that. And you see here now, both lines have crossed this moving average from down up. I'm going to be placing a buy. Now, I'm not going to be selling here, but I will buy here. I will not sell here. I'm going to be selling here because both lines have crossed the moving average 200 from up down. I'm going to be placing a sell. And that's how it runs. Now, when you have a consolidation like this, the strategy does not work well when there's a consolidation. In fact, it can cause you to be losing money. So but when the market start trending, you make a lot of money. So this is what I want you to study, and then it works on all time frame. Look at this one now. If I take it to 15 minutes, and this is 15 minutes now on gold, 15 minutes on gold. Now let me take it to like 100 and put it on also on 15 minutes. It works amazingly well. It works amazingly well, and you will love it. So I want you to spend time to study this strategy, and it's what you can use. For example, somebody who's busy, who doesn't just want to stress himself with price action and just wants to make money and say, and just you can just study it and see how